Our next guest says the market is facing a major test right here, and there are two key stocks that could help determine the fate of this rally. Let's go off the charts with Chris Verrone of Strategas Wealth Partners. He's over at the Plasma. Hey, Chris.
Hey, Melissa. Yeah, and listen, this is no doubt a very big spot, up 10% over the last 10 trading days. What I really want to focus on here is this 2,600 to 2,640 range. This is both the 50-day moving average. It's also the 50% move from the highs down to the lows. So 2,600 to 2,640, very big level. What for us will determine whether or not we break out or roll back over. We have to look at the internal characteristics of this market. One thing we see consistently, when markets are coming off of bottoms, good lows, you get a big expansion in new highs. New one-month highs tend to surge coming off a low. We haven't seen it yet. I think the threshold here, or the bar here, is high. And if we're looking for a couple of names to kind of dictate how we move from here, two in particular that I want to focus on. The first here, if we can bring it up, is Microsoft. Obviously the largest weight in the index. Really key spot here, right back at the 50 and the 200. That 105, 106 range is also the 50% retracement from the high down to the low. Key spot there. And then I think most importantly, the most important bank stock in the world. Frankly, it's been a relatively feeble rally for JP Morgan off the lows. Again, right back into 104, 105. Microsoft and JPM, we think, are the two bellwethers that dictate where this market goes from here.
Chris, why don't you come on over to the desk? Shelby will bring the chair in.
Well,
JP Morgan's not in MAGA.
no. Yeah, how did that miss on?
So
Like it.
if they report whatever the numbers are and the stocks go down, you're going to be worried about the markets?
You know, I forget who made the point, but we're 10% off the lows into earnings. The bar here is high.
Yeah.
And I think we need to remember we're only 10 days removed from a lot of fear out there. If you look at classic bear market rallies, up 15% over about a month or two is not uncommon. So for us to say, okay, the trend has changed and the first half of 2019 is going to be impressive, I think there's more work to do before we can embrace that story. I forget who it was who mentioned the shape of the yield curve. I've actually been a little underwhelmed the last couple of days. The curve really hasn't steepened to the extent I would have expected it would have. I think we've gone from 9 on 2s and 10s to maybe 15 or 16. I would have expected, given Powell's comments, a little bit more of a robust response there. Just haven't seen that yet.
But this is definitely, in your view, a sell the rally market.
I think until proven otherwise, this is a 2,600 to 2,650 area where the market meets a lot of resistance here.
So I'm curious, if you look at the market and we break down here, what's the next level? I mean, I could make a case that 2,200 is your next kind of major support level. Do you see that as well?
Yeah, well, I think we got to remember what some of the reference points here. We are still 10% above the 23.47 lows from a week or two ago. I think that has to be your first reference point. What I'm most concerned about, if we rolled over here, do the internals actually start to improve? Typically on these retests or these undercuts, you actually see fewer stocks breaking down. You'll see some positive things happen in other parts of the world. You know, Tim, you've talked about EM quietly a little bit better. That would be interesting to watch on any rollover here.
You singled out Microsoft, but I mean, a lot of people are watching Apple as sort of a tell on the markets as well. The stock has been acting better of late.
You know, Apple's interesting. Right now, if you look at analyst recommendations on Apple, you have the fewest number of buy ratings in about 15 years. So the sell side is as bearish on Apple as they've been in more than a decade. I actually think that's interesting from a contrarian standpoint. This 135, 140 name seems to be pretty good support on Apple. I would be far more inclined to embrace that one here than I would be a name that frankly hasn't been hit very hard, a Microsoft or an Adobe or a Salesforce.
So the breadth of the market, though, over at least this rally period, it's been actually quite extraordinary, and I've heard people talk about it in a bullish sense, and as a technician, you should like that. Do you just say, hey, everything was so oversold that this breadth also, had to happen?
So let's put it in context. Over this 10-day rally, I would say we've had 2 days that I would characterize as especially impressive internally. What I'm looking for, that second chart we showed, the percentage of stocks making a one-month high. You get that above 50%, and that's a low bar. It's not a lot for a stock to make a one-month high. You get that above 50%, that is your all-clear sign that enough stocks are participating in this move.
Chris, thank you.
Thank you.
Good to see you. Chris Verrone of Strategas. Pete, I'm going to pose a would you rather to you. It's a new year.
lucky,
It's a new year, and it's the first time we're going to roll this game out. Would you rather Apple or Microsoft?
I own both.
Right.
But I think right now, in terms of where I see Microsoft, I still think that's the better stock right now for upside. And the reason I say that is I think I think that Apple's going to be a little bit under pressure for a little while, and I think that's going to extend a couple of months, especially with some of the warnings that we're hearing and all the rest of that.
Yeah.
I think, unfortunately, the market's not going to digest that right. I think, on the other hand, I think Microsoft outperforms.
If you had to pick a tell on the market, a stock, which stock would you pick?
Well, the first thing I want to point out, I think the semis, if you look at Taiwan semi today, so look at the recovery in Asia I talked about. I mean, the semis actually were up almost 2.6%. That's what I want to see. I want to see semis which are still in a downtrend, so the technical guys can say you're running into the same downtrend resistance, certainly from October, but you can argue back to July. EM always bottoms first. EM is not going to be the reason you go out and buy the market. But again, names like Tencent, that's up 35% since Halloween, and that was the center of the storm. So people have started to work through some of this pain on China, or they've certainly gotten to this place where expectations of a deal mean I think there's more room to run on some of these
Yeah,
names.
Bernstein just upgraded Micron. That really helped lift the sector. But within that note, they also said they saw significant upside to SK Hynix as well as Samsung. So a lot of these beaten down names in Asia.
Yeah, but we've seen the bounce off those, right? So for me, if I'm looking at the U.S. market here, it's got to be the banks. I mean, that to me, as much as I like them, as much as I think they've got some upside here, if they fail here, then I think that takes the rest of the market with them.
That's what he needs to see, Dan. He's not saying it's going to happen. Don't shake your head at him.
Well, it's not your MAGA stocks. I'm sorry, it's not in the MAGA stocks.
I think that you guys are all silly. I think it all comes back to MAGA. We lost the Apple in MAGA. I think Microsoft is so important, trading at 23 times forward earnings. If you lose Microsoft, you're going to lose the market. If you lose Amazon, you lose the market.
How about Netflix?
Dude, we already talked about
No, but hold on a second. Microsoft and Amazon
MAGA.
have not been key to this recovery.
I understood, but it's $1.6 trillion in market cap, and my point is that I don't think the market will ever get back towards 2,800, the S&P 500, if we don't have the leadership of MAGA. It just won't happen. I'm just telling you. So
really
you can talk about your energy,
really
you can talk
loves
about your
MAGA.
banks,
Let him go.
you just don't do it.
I mean, come on, guys, don't be silly.
Of course.